What's up, y'all? This your boy Jay Wayne, you know, representing Team Take Profits. And look, man, I'm here because I'm supporting my boy Joe Giunta from Trading Get Paid. You know how we do it. We taking profits all day. But look, while y'all focusing on strategy after strategy, hopping around, trying to focus on some advanced stuff, and you know good and well you ain't mastered the basics yet. By the way, Joe, come here, man. Come here. Look, tell him, bro. The basics is what's gonna make you the money.
That's it. Your
foundation have to be firm in this Forex market, man. What you think?
That's why in today's video, back to basics, we're gonna be talking about spreads. I'm gonna help you understand why they happen, what they are, and guess what? How to trade them. That's what nobody tells you how to do that.
Nobody.
So I'm gonna teach you how to trade the spread. Not options, not stocks. I'm gonna teach you how to trade the spread on Forex.
I'm telling you, man, hey, look, we got the game. You know we got the knowledge. We didn't put, it's been 5.5 years for me, probably about 6.5 for him. Bro, we got the goods and we about to drop some gems. And look, guys, if this video give you some value, which I know it will, if you learn something new in this video, then give this video a like, comment, share the video with 2 friends, and subscribe for your boy.
I'll see you on the charts. All right, guys, so here we go. Let's talk about spreads. I'm gonna talk to you today about not only what spreads are, but how to trade them, how to use them. You know, we've talked about spreads in the past. We've had a lot of people, a lot of gurus out here telling you about the spread, but nobody really showing you how to use it to your benefit. So I'm gonna do that today. Okay. All right. So let's just jump right into it. So what is a spread? First of all, you have a bid and you have an ask price. The bid price is what the broker will sell the base currency for in exchange for the counter currency. So in other words, if you're looking at GBP AUD, which is, you know what I trade, GBP is the base currency, AUD is the counter currency. So if the bid price, if we're talking about bid price, we're talking about what the broker is willing to sell GBP for in exchange for AUD. And on the ask price, it's what the broker will buy the currency for in exchange for the counter currency. So in this case of GA, we're talking about what is the broker willing to buy GBP for in exchange for AUD. And so these are very important to understand because these things fluctuate. These things go up and down, and that is what determines, what the spread is. That determines what the market is, really. And so there's a lot of factors, which I'm not going to get into today, but there's a lot of factors that go into these prices, interest rates, and of course, market movement and whatever else. But essentially, the bid and the ask price, what is the broker willing to pay? And what is the broker wanting to get in return? All right. And it's just like any other, sale. Like if you buy a house and you buy that house for a certain price, you buy it with the intention that you want to sell it for a different price. So if I buy a house for $80,000 and I want to sell it for $100,000, so essentially my difference would be $20,000. I want to buy a house for 80 and sell it for 100. I want my profit to be 20,000. And so the difference between what I am willing to pay and what I'm willing to charge is the spread. And that's the same thing what the brokers are doing here. They're willing to pay a certain amount for this base currency, and here's what they're willing to charge for said currency, and that is where they make their money. All right? So when we look at that, the difference between the bid and the ask price is called the spread. All right. The spread, along with the broker fees, which is a whole different fee. It's a whole separate fee. And that's generally pretty small depending on what broker you have, what type of account you have set up, whether it's ECN, variable, all these different accounts have different setups. So I won't get into that today, but just for the sake of simplicity, if you're on an ECN account and you have a spread, you're also going to have a broker fee. And So you have a spread and your broker fee, and these are the first things that are applied to the balance of an active position. And that's important to understand because this is how the broker makes their money, right? The broker makes money on spreads and fees. And so what happens is the minute you press go, essentially the minute you say, I want to be in an active trade, and you press buy or sell or whatever it is that you're doing, all right, long, short, and the minute you do that, the trade starts in the negative. You'll notice that I've had so many brand new students that have come to me, and without understanding, maybe they get in on their demo account or something, and they come in and they get into their first few trades and they ask me, they say, why do all of my trades always start negative? And they think they're doing something wrong, but they're actually not. What's happening is if there's let's say a 3-pip spread and then a commission that averages to be about 1 pip, so you have 4 pips to cover, okay? And so immediately the broker charges that to you. So essentially, if they bought a currency for this much, this is what they were willing to pay for it, and they're selling it to you for this much, so that difference is charged to you the minute you purchase or make that trade. So if that's a 3-pip spread, the minute you press go, they charge you that. And so now you are 3 pips in the negative. And if there's a 1 pip commission, you're 4 pips in the negative. So you've got to cover that 3 or 4 pips or whatever it is before you can get into profit. So it's important, especially when you're talking about short-term trading, scalping, day trading, etc. It's very important that you know what your spreads are, know what your broker fees are, because these things have to be covered. And if you're going for a trade that only has 5 pips in it, and maybe it's a scalp and you're only going for 5 pips, and 4 of them are spread and broker fee, well, of course, that's not going to be very profitable for you to do all that work for 1 pip. So it's very important that you know how much spread you have to cover and what is your broker fee. So let's talk about that. If the bid price in a certain pair is 2.0893 and the ask price is 2.0895, okay, then the difference is 2 pips. Because of course, when we talk about pips, we're talking about the 4th number after the decimal. So 0893, 0895, that 4th number, the difference here is a 2 pip spread. Okay, so let's take a look at what this looks like on the charts, and I'm going to actually show you some tips on what you can do to actually use the spread in your favor to understand how to catch your profits in the market. Let's go to the charts. So we're looking at GA, we're looking at the 15-minute chart, so we're looking at a small time frame, and where we are right now, we're looking at some movement. We had some movement up. We got, it's not really a flag, but you got kind of like a waving flag here, and you have some movement, right? So you got some nice stuff going on, right? If you look at the chart here, you can kind of see this trend line. You can drop this right here. You can see you got some movement here. Really could even come up from here, and you see that you have some nice potential here. So if that's the case, then we would be expecting this to go down. At this point, we would be expecting price to drop at toward the bottom line here. All right, so if that's the case, if we're expecting price to drop, then the first thing we're going to do is we're going to see what our range is. So right now, we think that GA has 25 pips to drop. Okay, so we have room for 25 pips. As a scalper, as somebody who's going to get into a quick trade, we're not necessarily trying to get 25 pips. We might want to get 10 pips. I think that's a great goal for people who scalp. 10 pips is probably a really good goal for those who scalp. If you use proper risk management and you use proper money management, you can get 10 pips a day and make a whole lot of money. All right, so let's just say we're going to go for 10 pips. So here's what we're going to do. We're not actually going to go for 10 pips, because when we look at this, remember, if we have a 2 pip spread, all right, so we have a 2 pip spread, and then we have a 2 pip broker commission or broker fee. So we need to cover 4 pips in order to get into profit. And so 2 pips of that is the spread. So I'm going to show you real quick how to take 12 to 14 pips to get your 10 pip profit, and then just walk away having made some good money. So first things first, if we're looking to enter, the first thing we're going to do is, we know we have that 25 pip range. The first thing we're going to do is we're going to take a look and we're going to see, do we have a resistance level that this is rejecting? Well, of course, I showed you on the trend line there across the top that we do. And if you look, not only do we have a diagonal level, okay, like this, not only do we have this diagonal level here that comes from a trend line, but we also have, if you look like this, we also have a horizontal level. So right there we have confluence. In other words, we are going to have to not only break a level of resistance, but we're also going to have to break a trend line in order to continue going up. So right now the likelihood is, between the pattern we see forming, the probability and the openness of going down, and the confluence we see above at the resistance level, everything says to sell. Okay, and that's without looking at any indicators, nothing like this. Is just price action trading. We have a nice spinner top right here that has formed. So the next candle we would consider getting in. So the first thing we would have to do is we have to understand where our spread is. So if we enter right here, okay, at the open of the new candle, and look at the pip counter, we have 2 pips of spread and 2 pips of broker commission. So 4 pips right here. Okay? So the first thing we're going to do is let's drop a line right there. So at 4 pips right there, that's where we would need to get to be in profit. So let me just kind of break this down for you. The new candle is going to open. We're going to get in. I'm going to color this for you so you can see it. So we're going to call entry green, all right? And then we're going to call the broker fees and the spread, we're going to call that yellow. So we are entering at green and we need to get to yellow before we can even be in profit. So if that's the case, if we need to be in profit, if we need to get to the yellow to even be in profit, then if I want to get 10 pips, then what do I need to do? Where do I need to go? Well, it's really awesome because these lines and these markets, they do things in cycles, which I'm not going to get into, but I would encourage you to watch my video on currency cycling. I'll tag that video above and you can see it. But if we have to get in profit here, so let's just add 10 more pips to that. Okay? So let's say our goal is 10 pips. All right? So here we are. Look at where that ends up being. Okay? Literally right at the next level. Look at this. You have what used to be resistance here, support here. We got a rejection here. All we need to do is drop right back down to the next level and we have our 10 pips. It's really just that simple. So guess what happens? The new candle's going to open. We're going to enter right here. We're going to get into profit right here because we're going to be 4 pips negative. We're going to be into profit right here. So we're going to get 10 pips is the goal to profit. And then we have 2 pips of spread, so that's 12, and 2 pips of commission, that's 14. All right? So we enter the trade at the green line. We're negative. We get into profit at the yellow line. And let's make this line down here our target. Let's make that blue. And that's the money. All right? So it's really just that simple. If you know you have that structure, look what happens on the next candle. Just like that, in 15 minutes, we're in. Now, that doesn't mean you have to close your trade, all right? All that's saying is we have our profit target. So at that point, you have covered the spread immediately. We had confirmation because of the markups that we gave. We knew where price wanted to go because of the pattern. We had confluence at the trend and the resistance. And now we have a beautiful breakout. This shows us even further when you look at the swing trade, reduction, rejection, reversal, which is another video. You should watch that video as well. I'll tag it above. And so we've already got our 10 pip profit margin. And look at where the candle closes, literally right on our target, because the market knows exactly what it's doing. Guys, this stuff works in cycles. It literally gave us exactly what we needed. And then from there, look what happens. It continues to break out and we get some beautiful movement. And now we're looking at a live chart, right? So we get the breakout here, gives us our profit target, and then everything from here is all extra profit. So at this point, with one 15-minute candle, we went from entry to getting out of debt with the broker to profit, right? So we covered that 14 pips. We got our target. And now look where we are. We went all the way down and caught 33 pips. So we tripled. We absolutely tripled what our goal was. And all we did was use a spread to understand where to start and where our profits would begin. This is where, that yellow line is where we would start to see money in our favor, and we knew where to go based on previous levels of support and resistance. Anything after that is a blessing. Anything after that is extra. And right now, this trade is pushing down. I'm actually in this trade right now. When we look, we have a live trade session going on in another room right now with Jay Wayne. And we actually took this trade together live. We're still in this trade right now. And we plan right now, look, it's at a level of support right here. So, and you know, you see this right here. And so we're looking to see what happens at this level. If it breaks this level, then we're going to take it all the way down to here. If it breaks this level, we're going to take it all the way down to here. If it breaks this level, we're going to take it all the way down to here, and then to here, and then to here, and so on and so forth. We are literally not telling the market what to do, but letting the market come to us. We're letting the market do what it wants, and then we're just following, riding the wave of what the market is doing. So guys, that is how you use the spread to your advantage.
Hey bro, look man, that tip about scalping the spreads, bro, like game changer. Look, going for 12 pips and getting 10 from trading the spreads, scalping the spreads. Hey y'all, if he enlightened y'all, laced y'all up, comment below. I want to hear. I'm gonna read the comments, man. I'm gonna come over to your channel and read the comments. How many lives you changed with this video.
Hey, and if you want to become a student, if you think this was what's up, listen, I'm telling you right now, go ahead and become a student. www.trendtrading.academy. Go ahead and look at the comments. Go ahead and ask the students what they're doing. We're making money. The whole team is eating together. You need what we have. Am I talking right?
Bro, we killing it, bro. We killing 75% win rate. I want to say 85, but let's stay humble. About 75%. Anybody that's trading 75% win rate is changing their life, point blank, period.
That's it. We're changing lives out here. And it's all about skill set and learning and risk management and doing this together as a team. We win together. We make money together. I'll see you on the next video.